Hello and welcome. Today I'm joined by Neil Hermon, who is the fund manager for the Henderson Smaller Companies Investment Trust. Neil, thank you for joining me today. Now, equity investors around the world suffered during October's sell-off. First of all, what did you make of that? And secondly, do you think that volatility is a feature of equity markets going forward?
Yeah, October was a fairly brutal month for equity markets globally. The reasons for the sell-off are fairly manifold. So we've seen the concerns of rising interest rates in the US and rising long bond yields, Italian budget crisis, escalating trade wars between the US and China, some evidence that European and Chinese economies are slowing, and of course in the UK Brexit. So I suppose in some ways not surprising we've seen a bit of a sell-off in global markets. I think probably that we are going to see markets remain volatile. We saw a recovery in the last week, but given those factors and some of those macro effects, I think we are essentially going to see the markets remain reasonably volatile in the short to medium term.
Now, many shareholders will be increasingly concerned about their assets as the deadline for Brexit approaches. But without the magic of a crystal ball, it's almost impossible to make any forecasts with any reasonable conviction. So I'd like to know, are you mindful of Brexit, and how does it translate into portfolio management?
We're very mindful of Brexit. Clearly it's a huge consideration for the UK equity market, given what's going to happen to the UK economy post that. Unfortunately, I haven't got the answers on Brexit, and no one really does. We seem to be going towards a deal, but what that will be and whether good Parliament is a good question. So we're not making a big call on Brexit in the portfolio. Very balanced portfolio, a lot of stocks, about 100 stocks, very diversified portfolio. The shape of the portfolio is around half goes into UK and half overseas, so a good balance there really. And we're very much more micro-driven than macro-driven, so ultimately it's about stock selection rather than taking a macro view. So from our perspective, Brexit remains a consideration, but it's one of many considerations in our portfolio construction.
The Trust, of course, has a fantastic record of delivering capital growth for its shareholders. It's beaten the benchmark in 14 of the last 15 financial years. But of course, past performance doesn't guarantee future results. So why is now a good time to invest in Henderson smaller companies?
I think, going forward, I said the record is very strong, but unfortunately it only goes you next quarter. Fundamentally we're not going to change our process or philosophy or style. We're going to stick to what we do and what we think we can add value. So very much kind of a growth, but GARP, growth at the right price, growth at a reasonable price, very much kind of bottom-up stock-driven, focusing on quality criteria around the companies we invest in, being long-term and running our winners. So nothing's going to change in terms of our process and philosophy. Although clearly the short term remains uncertain, we are very confident long to medium term in terms of our ability to drive value for shareholders going forward. Additionally, the shares, the company trades on a discount to its net asset value, giving us support and confidence regarding what you're buying. So yeah, I think fundamentally we do believe the prospects of the long to medium term are good.